professional juggler, managed restaurants, worked in construction, lived on a sailboat for 3 years, taught English in Africa. And then at the end of my 20s, I thought I should go to school. So I went to school, never thought I'd be an accountant, because accounting. But I liked business. And then I went down the accounting rabbit hole, and it really spoke to me because it's the language of business. There's my Bible. This is my lovely wife, Catherine. If you haven't met her, you should. She's awesome. We like the sun and the beach. That's why I do this. So I've been a CPA for about 20 years. Almost 7 years ago, I started my own company. And one of my first clients was Alpha IT. I was in a BNI chapter, Wayne County Connections. We were the normal CPA firm. We did taxes, and we helped people mainly with taxes. Alpha IT went through 4 bookkeepers that I tried to help them find in a 6-month period. 1 retired, 1 we hired full-time, and 2 were just bad. So I got frustrated, and I told them, I will hire and train a bookkeeper, and we will do your books. So I did that, and then I had a bookkeeper who had 1 client. So then we started doing bookkeeping. My dad was a general contractor. I grew up in that world. I saw how he struggled with finances. He lost almost $1 million in the late 70s when the Bank of Fairbanks collapsed and was not FDIC insured. So that's a lot of what led me down the rabbit hole of business owners between the startup point to about 10 million plus don't get a lot of the financial advice that they need. My brother is a contractor here in town, so I see a lot of that currently in the construction world. Today I want to talk about S-Corps. So I get this question a lot. A lot of people call me, current clients, they ask me why become an S-Corp. They hear a bunch of different stuff from Uncle Joe, but they don't really know why. Basically to reduce your taxes. There's some liability stuff around it, but LLCs do most of that coverage anyway. So I'll give you some really high-level, simple examples. If your net income is $100,000, and you are a single-member LLC, which means that you're reporting your business on your personal tax return, you're paying self-employment tax of $15,300, 15.2%. I like round numbers, big pictures, crayons, crayon eater. So $15,000, let's use $15,000 as a round number. What you're paying in payroll tax. That's not federal, that's not state, that's just FICA, Social Security, Medicare, whatnot. In an S-Corp, we put you on a $50,000 salary, you take $50,000 out in distribution, so you still end up with $100,000 in your pocket, but now you're paying approximately $7,000 in payroll tax. That's a $7,000 saving with 1 form filed with the IRS, and we put you on a salary. That salary can vary based on what you do and how much you work and how many people in your company and whatnot, and that's something. Again, I'm keeping this high level, but I want you all to write these tips down so you go back and talk to your CPA about, I want to do this. So, strategies outside of the payroll. I use this in all of our S-Corps. The Augusta Rule. See, the Augusta Rule comes from the Masters Tournament in golf, taking golf. But the Supreme Court ruled that if you rent your personal residence for 14 days or less a year to anybody, it's tax-free, you don't report it on your tax return, it's basically free money. There's nothing else that I know you can do that. You can't rent your car, you can't rent your equipment, you can't rent anything else. But your personal residence you can rent for less than 2 weeks a year, tax-free. The way we use this, my S-Corp rents my home from me for market rate, which is for a daily conference. Last Friday we were in an all-day conference with Alpha IT in a conference room here locally. It's $750 to $1,000 a day for a full room for the entire day. I try to rent this for a day. So if I rent my house to my home for a daily use, that daily use can be employee meetings, it can be client appreciation events, it can be meetings with vendors, it can be anything as long as you document it well, the reason you would rent a room, why we're all here. You rent it to your business for up to 14 days a year. Your business gets a $14,000, we'll do round math, $14,000 expense in rent, and your personal side, you don't report any income. So that's, again, that's a $14,000 tax-free income distribution. Most Americans are in the 20% bracket federal, 10% Oregon. really easy to hit 10%. So you're in a 30% bracket. $14,000 of tax-free money is going to save you $4 grand, approximately. That's the Augusta rule. We use that in all of our companies. The accountable plan. So the accountable plan is basically a document that a corporation has, in an S corporation, that says we reimburse all employees for all expenses that they pay out of their own pocket as long as they submit us receipts within 30, 60, 90 days. Whatever that policy is, it's your company. You make the policy. The example I give to potential clients or clients is, if I'm driving to work and I stop at Fred Meyer's and I pick up 2 boxes of printer paper and I didn't bring a business card and I buy it cash, I'm going to walk into work with a receipt and say, I'd like to get that money back, please. And the company is going to say, thank you for picking up the printer paper, here's the money back. It's a reimbursement that your employees spent out of their own pocket. The way this works in the accountable plan is if I have a home office, everybody's heard of the home office deduction, that's crap. That's $5 a square foot is usually how we run it. There's 2 different ways to do it, but that's the normal way to run it. The other way is to reimburse your employee for all the actual expenses they're paying for in their home office. Their internet, their property insurance, their utilities, that space of keeping it maintained, probably their own personal computer. So if you were to go rent, again, the IRS calls it fair market value. If you look at what it would cost you to rent an office downtown for a month that's fully furnished with utilities, computer, and everything else, you're talking $750 to $1,000 a month for most small offices here in town. Again, round numbers. So I rent my business, my home office, for $750 a month. I tend to go a little conservative, whatever. So that's another $9,000 a year that my business reimburses me for use of my personal equipment and personal space. This is not taxable income to me because I've already spent the money on the utilities and the home insurance and everything else, but the company's paying me back. So between those two, we're now at about $23,000 in expenses that is tax-free money to your employee, which if you're the owner in an S-Corp, you are an employee. Home office, internet, phone. Obviously, there's a lot of documentation. Not a lot. We get it quarterly from our clients. It goes into a spreadsheet, tells me what they're spending it on. We go into their books and we move it into rent. Reduces taxable income. Another big one. If I drive from home to work, that is not business miles, that is a commute. You cannot take that as a business expense. If you're leaving from your house to go do business, the IRS considers that a commute. If I have an office at home, it is no longer a commute. I'm moving from one office to the next office. So I had a client that lived in Lowell, and he was commuting from Lowell to West 11th every day. We saved him $6,000 in mileage because that was no longer a commute. He had an office at home, and he had an office downtown. Another way we do that, at business purpose trip, for personal mileage deductions. There's lots of ways to track mileage. There's a couple apps. I don't do it a whole lot because I don't take it because I'm not commuting. But there's a lot of app for it. You want that. For your kids, it's a great one. So up to $16,000 of income is tax-free for any individual in the U.S. That's a standard deduction right now. I have a client with 10 kids. You think your life's busy. They just had their 10th last year. Still going. So we've got 4 of them on payroll, right? Because 15 and older, working in the business, and again, you want to document that you just don't want to pay your kid a $16,000 check in December. You want to document the hours every month, but there's multi-purpose to this. 1, you're teaching your kids work ethic. 2, all those things that you should be doing that aren't, like cleaning your truck or posting on social media. Oh, we have someone doing that. Not posting on social media. Going through your inbox, responding to people who have called. All of that stuff can be something that you can teach your teenager to do. Thank you. 2-minute warning. And if you hire your kids into your business, we file a tax return for your children up to the $16,000 or whatever you pay. It could be 5, doesn't matter. They don't pay any taxes on that, and because they're under 18, they don't pay all the payroll, FICA, and anything else like that. So that, again, the company's getting a deduction. The money's still coming into the household because you don't have to hand your kids this money, and if you do start charging them rent or have them buy their own clothes or have to pay for their whatever, right? Your kids can pay for half of the stuff they waste, which is a lot because kids are expensive. So you pay them for real work. There's lots of things they can do. Like I said, the client has 10 kids, they do property maintenance. So these kids go out, they have a bunch of rentals, and they mow the lawns, and they do all that work. And then you then pay them for it, which is great for the kids to learn and good for their taxes. Okay, quickly, because I'm down to my last 2 minutes. So everyone says become an S-Corp, but what they don't think about is there are additional costs. I don't even start looking at it for clients until they're around 60 to 70,000 net income. And the reason is you have to now get a payroll company. As an LLC, you don't if it's just you, you're a solopreneur. I pay $250 a month for my payroll company, so you're talking $3,000 in additional costs just to be an S-Corp. If you're with a normal CPA, they're going to charge you $2,000 to $3,000 for an extra tax return. We don't do that. All of our stuff's included. But right there, you're talking an extra $5,000 to $6,000. So if you're paying an extra $5,000, you need to be at least saving that before it's worth becoming an S-Corp. So don't just go set yourself up as an S-Corp without talking to somebody. Compliance requirements, again, we go back to like the requirements and board meetings and all that stuff you need to document. I help with that with my clients. All right. Tried to fit that in 10 minutes. It was a lot of high level, but we took some notes because if you have a CPA, go ask them about those 4 or 5 tactics I gave you and say, how can I use this? And if they don't know how, call me.
Can you audit, if we already have a CPA do our taxes, can you audit our returns? If we're not happy, not necessarily if we're not happy, but just to keep our CPA honest?
I don't usually do that now.
Okay.
Because again, the value is then, if I tell you, here's all these strategies you aren't using, and you take it back to your CPA, he's either gonna argue against those strategies.
Okay.
So I'll give you this. CPAs, lawyers, and doctors have one job, CYA.
Yep.
That's their job, and I don't blame them for it, because every tax return that I put my name on, I'm liable up to a year in prison and a $10,000 fine if fraud is found. Most people don't know that, because I'm a CPA. So their job is to give you the most conservative advice. I give legal advice, and all of these strategies, I give you Supreme Court rulings, and I've argued with lawyers about it, thank you, Michael, and been right, because when I show up as a fraud examiner for 10 years, I have all this documentation. I'm also a certified tax coach. 2% of CPAs in the US have that designation. Most CPAs do compliance work, they don't do strategy work. So I don't normally go in, because what I'd have to do is get everything. It can't just look at the tax return. I'd have to get everything that supports the tax return to see if it even works for you, and then build out a profile, and you would take it back to your CPA, and at that point, we don't do project work.
Yeah, that's fine.
John?
The business is hiring their children as employees, like how early can they start working for a company? Like, child labor laws?
Yeah, Oregon has child labor laws. There's ways younger children can do it, but mainly that's around advertising, and it's not worth it. When we've looked at it from the documentation standpoint, somebody saying I put my kid on my website and paid $5,000, good luck. Like, you're not going to be able to support that, right? So it's like, we usually don't until they meet the child labor laws in Oregon, which, 13, 14. And again, in a family-owned business, parent, it's a little bit different because there's a little bit more leeway. So yeah, it's mainly teenagers. Dan?
So in my other job where I sell franchises, I always advise people to do an S corporation rather than an LLC, but I've never had a good way to articulate why. I'm normally like, just ask an accountant, and in most cases it's better. But I just wanted to thank you because you actually gave me some good ammunition today. So
good.
Yeah.
And most people don't know the why. And most CPAs, again, don't do this, and they don't use it. At Jones and Roth, we didn't use Augusta, and we didn't use Accountable. So I'm talking this year I saved $20,000 from a client I saved yesterday that came to us last year and made it at school. So that's back in their pocket, $20,000. That's a significant amount. Yeah. Thanks, everyone.
Yep.